Yes, welcome everybody. We're just gonna wait like 3 minutes and then we'll start. Yes, so I think we can start. So we'll start by looking, well, basically on our schedule is basically news, the economic calendar. Then we're going to look at some theory, for example, the head and shoulders, and both bullish and bearish. And then we're going to make the make basically the scan and the Q&A. So there's not a lot of news in the, for example, the economic calendar. However, there is some significant news also in here over at investing. Uh, Main news, basically, Powell's going to make a speech. He basically made an interview on 60 Minutes, and where he basically said that the economy is basically going back to normal, or he was very bullish on the economy going forward. However, there is basically still the risk of COVID and so on. So that's going to be probably a part of the economy for the foreseeable future. It will probably not go away for probably a long, long time. I can't say how long, but probably a very long time. So it will be a part of the equation over and over again. So then there is basically Alibaba, and everybody that followed me on Patreon last week. I was fairly lucky with this. I was not buying Alibaba because of the particular news that was coming, but I did buy Alibaba last week, and basically 2 days ago, I think it was that, there was news that they were basically fined. That's not particularly good news. However, the fine was really, really small. So basically, they were fined by regulators in China 2.8 billion, which apparently is a record, and that is only 4% of their annual domestic revenue, which is really nothing. It is basically a slap on the wrist. So people were basically expecting 10% or even much harder regulations and so on, but technically they didn't do that much. 4% is just kind of symbolic. They won't barely notice that they will lose that money. So Alibaba, therefore, is also up today roughly 6%. And this has been a stock that has been absolutely battered the last few months. Their CEO basically went missing due to the fact that he kind of criticized the Chinese government. And then it basically has fallen. I don't have really numbers right at the moment. I think it's around roughly 25 to 30% in the last 3 months. And it has one of the lowest PE ratios of the major tech companies. Most of the other tech companies, for example, in the United States, they are at 50 or higher. And you look at Tesla, they're basically at 1,000, but it's also a growth company. While the PE ratio for Alibaba is around 25. So it's fairly cheap, even though that is also a fairly high PE ratio. So that's basically the main reason why I bought it. But I got fairly lucky because of regulations. They were not as severe as expected, and their fine was not as severe as expected. So this is a company that will most likely do really well. Other than that, we can look at the yields, for example. They are down 0.12 here. They are down 0.12% this morning, and they're actually going down. So we're still in this uptrend, but you can see that the MACD, it has crossed the signal line a long time ago, basically over here. This was basically in the end of March, and since then we're basically going gradually sideways, and the MACD has basically been in a downtrend. So there is quite a lot of resistance underneath. You have the 50-moving average down here. So this could only be basically a pause in this trend, and we may see this rally to the upside. So the yields are coming to due today. So there's going to be an auction for the 10-year yields today. So that may have some effect on basically the yield. But otherwise, this was making havoc the last few weeks on the stock market. For example, Nasdaq was basically hammered, and also most of the growth stocks from 2020 have basically been hammered, mainly due to the yield increasing. Now we're basically trading sideways or a small downtrend, and therefore the stocks are basically also increasing. So if this continues to rally, then we'll mostly see the major tech stocks to drop yet again. Then we have the US dollar index, and also here this was fairly surprising because it was extremely bullish, but I don't think we're out of the waters yet. So we do have an uptrend line here. Do have an uptrend line there, and we have the bottom basically down here. So we could see this go into this channel for the foreseeable future. If this channel, for example, breaks, then we may turn back towards the 50-moving average and also below that. But otherwise, we are basically within this channel and are basically bouncing off this channel. And it has been dropping significantly the last 2 weeks. And this has also had major implications, for example, on stocks, commodities, and so on. So pay attention to basically the yields and also the US dollar. There's a negative correlation between the US dollar and the precious metals commodities. And yields, usually when they go up, it basically is a very negative sign. There's a negative correlation between this and, for example, the equity market. So otherwise, there's not a lot of news. For example, in the economic calendar, there will be more significant news later on this week. You can see there's only twos and ones. However, probably the most important today is basically that the treasury bills are basically due, and there will be going to be an auction of those treasury bills. So let's go and look at TC2000. So the idea today is basically to look at the head and shoulder formations, and I will basically get this up. So there are two types of head and shoulder formations, and the reason why they are called head and shoulders formation is because they basically have the shape of shoulders and a head. And we have bullish ones and we have bearish ones. So the bearish one is basically when you basically have the head above, and the bullish one is basically when you have basically the opposite direction. So a pattern of a head and shoulders looks something similar to this if I draw it up. So sometimes it is very easy to spot a head and shoulder formation. Sometimes it's not very easy to find to see a head and shoulder formations. And sometimes when it's basically very difficult to see it is because we're basically in an uptrend. So you basically can have a head and shoulder formation when you're still in an uptrend and also in a downtrend, and not just going sideways. When it's going sideways, for example, something similar to this, when price action is going like this, then it's really easy to see where basically the shoulder is, the head is, and where the shoulder is. So this is basically called the left shoulder, and this is called the right shoulder. And in between this, we basically have the head. So price action will go here to this top, break down, back towards this similar level here, then go a little bit above this left shoulder, then drop again, then go to the right shoulder, and then after it basically drops here, it may break what you call basically the neck. So this is basically the neck of this formation. And if this neck breaks, then you usually have quite a big drop to the downside. So you may see something similar to that. And usually this drop is equivalent to the height of the head, the top of the head, and basically to the neck. So something similar to this. So this is basically from the top of this formation all the way down towards the neck, and usually the drop is similar to this. And I'll show you an example of this in a moment, where we can look at, for example, Amazon stock, which I found both formation of a head and shoulders, both the bearish one and also the bullish one. So if you can just get rid of this, if you just take it over again. So this is a bearish head and shoulders. You basically have a left shoulder, you have the head, you have the right shoulder, and when it basically breaks the neck, it basically drops significantly to the downside. So that's why it is basically a bearish one. So we can look at, for example, it was in February. So if I drag this is a weekly chart, drag this over to February, where we have a head and shoulder formation. It is basically over here. So it's basically this area here. And after this neck breaks here, we basically have this drop. And this is basically the drop that we have been witnessing recently. So if you write it up, you can see that we increase to the left shoulder, then drop, then we go to the head, then we drop again, and then we have the right shoulder, which is right here, give or take, something similar to that. And when the neck we have right here, when this basically breaks, we see that we have this massive drop to the downside. So, for example, we have additional head. So we have left shoulder, we have the head, and we have the right shoulder. So these formations don't really often show up in in daily charts, but if you look at the lower time frames, you will constantly see these formations that you go up to the left shoulder, drop, head to the right shoulder, and then you drop this significantly to the downside. So if we calculate this, for example, from around here towards the top, this is give or take 6%. And usually the distance between the head and the neckline, which can basically go a little bit further down, usually this distance between the head and the neckline is how far this will basically drop. It is not always 100%. In this case, we basically massively overshoot. That's why also we have this really bullish candlestick here. This should probably have dropped towards this level, 2,953. That's probably as far as it should have dropped. So if we, for example, calculate how far this is around 6.18%. And if we take from here all the way up to here, this is around 9.57%. So give or take. So this was a fairly big drop, but usually this is an estimate of how far that we basically can drop in this formation. So it did drop significantly further. If we, for example, looked at the Bollinger Band, we can see that this was significantly outside, and this was probably also outside. So it was basically overshot. So this is what we basically call a bullish head and shoulders when it is not bearish head and shoulder when we basically have a drop. Then we have the bearish one, and it's basically opposite. So here we basically have the left shoulder downwards. Then we have a bigger drop, which is going to be the head. We have it here. And then we have the right shoulder. And then we have basically the neck, which is around here. So we drop down, pull back, drop down even further, pull back, drop down around the same area. It's not always the same, but it's around the same area. And then we rally again towards the neck. And if the neck basically breaks, then you could expect that we will rally basically the head from the head to this formation, or the shoulder, which is 24% in this case. Then you should expect this to rally also additional to the upside, give or take around 24%. So it would be something similar to this, not just vertical. Something similar to that. And I have an example of this. It's also in Amazon stock. It was quite far back when we basically, it was all the way back towards February in March in 2020. So basically when the start of the coronavirus, when we have this. It was basically here. So it's not that visible, but it is very, very go all the way in. Then this back then looked like a head and shoulder formation. So we basically have the drop here. Then we have a rally. Then we have a bigger drop to the downside. And then we have an additional rally. Then we drop back towards this level here. And then it's going to be the test of whether or not basically the neck basically breaks. And that is also what basically occurred here. So we did rally up towards this area here. And after that, we can see that we see this massive rally to the upside. So this, we have the left shoulder down, rally, fall towards the head, rally, fall towards the right shoulder, and then we basically test the neck. And if the neck basically breaks here, then we basically go and jump significantly further. So this is a move of give or take 23%. So the distance between the head and the neckline is around 23%. If we look at how far this basically rallied, it was give or take 22%. So this fits fairly well. So it's kind of in the same the same from the head towards the neck and from the neck and where basically rally. And that's kind of nice to know when to basically leave the market. It's also similar to the consolidation when you basically go up and down and so on. The distance between the bottom and the top is basically the distance where we're going to rally towards the upside. Yes, so go all the way back, and we have it here. So, do you have any questions? My idea to going forward is basically to put all of the technical courses into one tier, which members that have tier 3 will get access to. So instead of scrolling back and forward in, for example, Patreon, there will basically be a tier where all the courses are, and then you just click that and you basically get access to those courses. Okay, so we can go and look at, for example, the NASDAQ that I wanted to do before. So the NASDAQ is basically on the edge of breaking out. We are right here. So this is the all-time highs. We were right underneath the all-time highs, or just at the all-time highs. So we are fairly overstretched. I have been expecting a pullback in the NASDAQ for quite some time. We have the crossing of the 20 exponential and the 50 moving average. We have the crossing of the 40. So these crossings are kind of an indication that we are about to continue further to the upside. We may see a pullback, and that's basically the pullback that I'm waiting for. It's basically a pullback towards these previous highs here at the 13,300. So a drop of give or take 500 points or 3%. That is basically what I am waiting for. And the rally from there will basically be much safer than basically buying into this at this current stage. You can see that RSI is very high. It's at 77. We're significantly outside here in the Bollinger Band. Otherwise, technical indicators are very bullish. It is earnings season that is coming now, so it's kind of pause in the market because people are not going to buy before they basically know the numbers or have rumors of the numbers and so on. And as soon as that occurs, then people will start buying into this. So we can go and look at for example, the scan, and as you can see, I have done the scan for basically the stocks that are overstretched at this current stage for the S&P 500, and there are only 2 stocks at this current stage. So there are, for the one that is called the COG, so Covered Oil and Gas Corp. So oil market has basically been really unstable, and most of these companies have basically been hammered, probably also because of the infrastructure bill that is also about to be going to be passed in the next few probably months. In that, it is green energy, not traditional oil and gas companies that are going to benefit significantly from that infrastructure bill. But this is an interesting stock. I'll weigh on in this stock when basically the market opens. I haven't looked at pre-market, but as you can see, we are significantly outside here of the Bollinger Band. We are also in an area which has found major support in the past, and we are fairly low in the RSI. It's not significantly low, but it's fairly low. Other technical indicators are very bearish at this point. So the MACD is in the negative territory, has crossed the signal line, so it's in bearish momentum. The RSI is bearish, the CCI is bearish, and the stochastic is also bearish at this point. So this is trading within a square, and it is basically at the bottom of the square at this current stage. So it's trading at $17 a share, and it could rally towards $19, which it has been doing in the last few basically the last few months. So since the beginning of 2021, it basically has been in this square. So it has also been in this square formation before. We both basically were here in this square formation, and it basically broke out. So this is a good example of a consolidation where we are hitting a point of support, hitting a point of resistance, and at some point we basically break out of this rally. So usually this also rallies the length or the height of this formation. So from the bottom here to the top, give or take, is around 11%. If you look at the bottom here to the top, that is also roughly 11%. So it's technically just two squares that you just have moved a little bit higher. So the question is whether or not we're going to see a similar thing, that this is going to continue rallying towards the upside and then break to the upside. That would basically mean that we would rally additional, give or take 11%. So the height of this is around at this current stage around 12.2%, 12.7%. And that means if we break out from here, then we could see this rally additional 12.12 towards the $21. So that is going to be interesting to basically watch what basically happens here. If this breaks to the downside, then we could basically see this drop all the way down back towards these previous lows around $15. So a drop of roughly 8.11% to the downside. So just keep that in mind. If you look at the cloud for the stock, you can see that currently we are in a downtrend. We had a crossing here of the 9 moving average and the 26 moving average, and that is basically the selling signal for the stock. We had the buying signal here, and it has basically just gone back and forward in this area here. So yes, it is. This is going to be a stock that I'm going to look at, and if we have a crossing here of these moving averages, which we probably have in the 4-hour chart. No, not really. That's also bearish in the 1-hour chart. No, that doesn't really help either. So yes. So yeah, I'll have a look at this because it kind of looks fairly interesting, whether or not we basically rally from here, because it basically means that we'll go back towards the top and we could see a breakout towards the upside. This has been trading at the very highs all the way up towards $35, so it is fairly low at this current stage. So let's look at the other one. There are only two of these, and this is CAG. And the CAG has broken below the Bollinger Band here. We can see that we rallied and broke down, and we're finding quite a lot of resistance here at the 50 moving average. So at this current stage, technical indicators, they are fairly bearish, and this does not look like a stock that is all of a sudden going to rally back towards the very highs. Usually, for example, the MACD is going to take probably 4-5 trading days before it basically the histogram basically turns around. You can see basically how these histograms formation, it doesn't just go straight to green or straight to blue, which is bearish. It takes quite a lot of time before it turns around. Stochastic is also very bearish. The CCI is also very bearish. So we may stay here for a while. If it stabilizes at the 50 moving average, then that could be a sign that we are going to go to the upside. If this breaks below the 150 and the 100 moving average, then this could drop to the 300 moving average down here, which also basically happened over here. So it is to be seen what basically happens here. But these are two of the two of the only stocks that are significantly overstretched to the downside in the S&P 500. So we can go and look at stocks that are overbought at this current stage, and there should be quite a lot of them because we have been rallying significantly the last few trading days. So we have the S&P 500, and I have 103 stocks that have basically been are overstretched at this current stage. So yes, the market. This is a major. This is basically a major warning. When you have 103 stocks that are basically outside of the Bollinger Band, you can basically see it right here. Then this index should be expected for a pullback. It is difficult to get something, for example, S&P 500 or NASDAQ, to rally further when it gets above 70 or 80 or in something like that. And they basically have a massive drop towards probably the bottom of the Bollinger Band. So most of these, all of these 103 are basically overbought at this current stage and could expect a pullback towards the middle of the Bollinger Band. So they are, you can see this one. It is this is HNO, and it is the RSI is at 74. We are significantly outside of the Bollinger Band. We can see what happened here when that happens. We fell all the way down towards the middle, a drop of 5%. Also here we dropped towards the bottom, a drop of 5.4%. So this could drop from here all the way down towards the middle, which is also a drop of roughly 5%. Then we have CBH, and also here on the edge of being overbought, significantly overbought here in the Bollinger Band, and this is just screaming pullback. This is a very bullish candlestick, but pullback should be expected at this current stage. For example, we can look at, for example, the tech stocks they are all here as well. Yes, we have them here. We can see that tech stocks that we usually look at, which is Microsoft and Tesla, Apple, and so on, they're basically all in this list. So I can just look at these tech stocks as well, because so basically the stocks that I usually trade. So we can see, for example, Microsoft significantly overstretched, significantly overbought, and a pullback at this current stage should be expected towards the middle of the Bollinger Band, which is roughly here. So a drop of 6.36%. Tesla has not been doing really well. It's basically the reason why I bought into Tesla last week, is because it has lost a significant part of its value. Technical indicators for the MACD are basically bullish at this point, and otherwise I was hoping for a rally from the 20 exponential. And if you look at pre-market, Tesla is up at 2%, and therefore it should be around the 100 moving average, around the $700 level. So we need to break above the 50 moving average. If we don't manage to do that, I'll probably get rid of the stock, because that means that we'll probably drop back towards the 150 moving average, and then I'll rather buy it down here. So if you look at Apple, same thing here, significantly overbought. We are also here in the RSI, overstretched here in the Bollinger Band, and overbought in the RSI. So Apple should expect a pullback in the next few trading days towards the middle of the Bollinger Band, which is all the way down here at give or take, this is 124, or the 50 moving average at 126. So a drop of $6 could be expected for Apple stock. Facebook has also been rounding significantly. It is rounding off. This is what I do expect from most of these tech stocks, that they will basically round off towards the to support again, and then continue rallying. This was significantly overbought and significantly stretched, and therefore it basically needs a pullback. So in all these cases, is basically buying the dips. There's no reason to basically to sell the short this, because it can turn around all of a sudden. Then we have Google. Same thing here. I tried to short Google over here, and this is basically what happens. So I held on to Google for a very long time. It broke down a little bit, not significant, but it's just a waste of time. A better thing to do is basically just buy it at the major support and then get this rally. So this will most likely fall towards the 20 exponential down to 2141 or towards the 50 moving average at 2073. That is a drop of give or take 6.6% or 9%, and there is basically the buying opportunity to buy it at major support if that is support. Then we have Amazon also here significantly overstretched, and it is going to have a pullback. So these are all turning around, and it's going to look really good for NASDAQ. This has basically made the NASDAQ move recently, but pullbacks from here will of course affect the S&P and the NASDAQ in the coming days. And then we have Netflix. So Netflix has started to turn around and should expect to have support down here. Also significantly overstretched, on the edge of being overbought. So if the major tech companies all are about to turn around, then it is very likely that we'll also see a turnaround in the indices, as these are a big portion of those indices. Yes, any questions? Then I think I'm going to stop it there. You're always welcome to write to me on Patreon. So, good luck and thank you very much.